But I think, as well as the euro, if you look over at sterling, I think it's a very interesting situation because the UK is beset with a very similar set of problems, and yet you have the Bank of England trying to, and even the market marking up the Bank of England to respond more forcefully to these very remarkable CPI numbers we've seen, and yet the market is still punishing sterling here. So I think both of those currencies, the euro and sterling, in a very bad situation with energy prices, with power prices, and that will remain the case. I think that the extra pressure, as long as their situation is under far more pressure than elsewhere in the world with power, gas prices, et cetera. You're talking about a cost of living crisis, shutting down industries during the winter, et cetera. So I think that situation continues until we get some kind of development in the Russian-Ukraine war front that suggests that things are going in a different direction.
So a lot still comes back to what's happening geopolitically. John, let me dive a little bit deeper into what's happening in the UK. That double-digit inflation print captured the attention of many in the financial world and outside of it. Do you think that the Bank of England has misstepped at all here, or is Andrew Bailey in control still of the inflation narrative and in control of the overall situation?
No, I really don't. I think the Bank of England is chasing from behind and did a very poor job of getting underway, and their pace has proven too cautious and too slow. I think if we look at what happened over the last week, I alluded to it before. You had a very powerful CPI print, much higher than expected. And yes, the Bank of England has forecasted that inflation will reach 13% or so as we work into the fall. We marked two-year UK rates up higher on the back of that inflation print by something like 40 basis points over a couple of days. And then sterling versus the U.S. dollar, yes, U.S. rates rose a little bit as well, but the spread rose a great deal, and yet the sterling U.S. dollar rate was hardly changed, and now it's hitting new local lows below 120. It's sort of bordering on emerging market currency behavior. I'm not saying the sterling is an emerging market currency, but it's just the situation that the backdrop is so dire that the Bank of England can only chase from behind here. And if it does get ahead of the curve, it'll be with brutal rate hikes that are, of course, a huge risk to the economy and a brutal recession. So it's just not a good situation until this cost of living crisis is, in relative terms to elsewhere in the world, is resolved in the UK. And that can only come when there's relief on the power, natural gas front, et cetera.